Hello, YouTube and fellow bullion stackers. Welcome back to Turbo's Bullion Online News Edification, or T-Bone for short. This is the 25th week of 2025, and today we're diving into the latest market moves and top stories impacting precious metals. Let's start with the current Kitco spot prices as of June 15th, 2025. Gold is trading at $34.33 per ounce, up 3.6% from last week and soaring 29% year to date. Silver is at $36.31 per ounce, slightly up 0.64% for the week and gaining a solid 22% year to date. Platinum is priced at $12.28 per ounce, down about 1.2% this week, but still showing a modest 3% gain year to date. And palladium is at $10.32 per ounce, down 1.9% this week, though it remains up nearly 13% for the year. That leaves our gold to silver ratio up to 94.55 from 92 the previous week. Turning to the broader market indicators, the US dollar index, or DXY, stands at 98.18, inching up 0.3% this week, but down nearly 4% since January, a trend that tends to support precious metals prices. Meanwhile, the S&P 500 closed at 5,976.97, down just over 1% this week, but still up an impressive 20.6 year to date. With that quick market snapshot in mind, let's jump into Turbo's Bullion Online News Edification and break down this week's top bullion and precious metals stories shaping the market. This week saw increased geopolitical tensions in the Middle East with new escalations between Iran and Israel. This conflict has traditionally driven investors into gold, the ultimate safe haven, causing gold prices to surge. Since the conflict news broke early this week, gold climbed about 2.4%, supporting the overall monthly gains we've seen in 2025. Silver and platinum also reacted positively, although more muted, as their industrial uses mean geopolitical risks impact them differently. Mining stocks, especially those with exposure in geopolitical hotspots or global supply chains, showed some volatility. Companies operating outside the region benefited from safe haven flows. This tension fuels demand for bullion as a hedge against uncertainty. Expect continued interest in gold if the conflict continues to escalate or broaden. A major milestone this week, gold not only surged to its highest weekly close since 2020, but also overtook the euro as the world's second most important reserve currency behind the US dollar. Central banks globally have increased gold reserves, partly in response to lingering global instability and inflation fears. This shift is monumental for bullion stackers and investors as it signals a growing institutional belief in gold's stability and value. It's also fueling higher demand, tighter supply, and potentially increased premiums on physical bullion and coins. For the mining sector, this trend supports ongoing investment, exploration, and production growth, especially in politically stable regions, such as the US. Platinum traders on the London Metal Exchange reported a sharp spike in the monthly implied lease rate this week. The lease rate reflects the cost to borrow platinum for futures or physical delivery, and this jump suggests growing tightness in supply. Physical inventories have been dropping sharply, down over 40% year over year at major exchanges. This squeeze is further intensified by rising demand from the automotive sector, platinum's critical role in catalytic converters, and the booming Chinese jewelry demand. A rising lease rate often signals a potential short squeeze or an impending price surge. For stackers, this means platinum might see increased price volatility, but also upside momentum in the near term. UBS, a leading global bank, updated its short-term silver price forecast this week, expecting silver to reach between $38 and $40 per ounce. This is a bullish outlook based on supply constraints in key mining regions and rising demand from green technologies like solar panels and electric vehicles. Silver's historically undervalued position relative to gold, coupled with an industrial demand strength, supports this optimistic forecast. For stackers, this means premiums may rise soon, and dealers could begin tightening supply. Silver mining companies are expected to benefit, but investors should watch for potential volatility as market players react to changing fundamentals. Looking ahead, the Federal Reserve is scheduled to release its interest rate decision this week alongside several key government economic reports, including inflation and employment data. Interest rate hikes typically weigh on gold prices as they increase the opportunity cost of holding non-yielding assets. However, if inflation remains stubborn, precious metals could hold their ground or even rally. Silver and platinum prices will also be influenced by industrial demand outlooks and economic growth signals contained in these reports. Mining stocks often react swiftly to rate decisions and data surprises. This week's volatility in futures markets underscores the sensitivity. Mining stocks often react swiftly to rate decisions and data surprises. Last week's volatility in futures markets underscores the sensitivity. Stackers should monitor these releases closely as they may create short-term buying or selling windows in bullion markets. Summing up week 25, 2025, the bullion market is riding strong momentum driven by geopolitical risks, institutional demand for gold, supply tightness in platinum and silver, and forward-looking positive forecasts. Gold's breakout as a dominant reserve asset and safe haven is likely to keep prices buoyant. Silver's green tech demand and UBS's bullish forecast point toward a strong second half of the year. Platinum's supply squeeze and lease rate surge could trigger notable price spikes, especially as Chinese demand intensifies. Palladium remains a wild card, but may stabilize if auto industry trends hold steady. Looking forward to this week, keep a sharp eye on Federal Reserve signals, ongoing geopolitical developments, and mining sector earnings updates. For stackers, diversifying across gold, silver, and platinum remains a smart strategy, balancing stability with growth potential. Drop your thoughts and stacking plans in the comments below. Are you buying into this platinum squeeze? Are you holding gold through geopolitical turmoil? What about, are you loading up on silver before the next breakout? Let us all know. It's very interesting to follow the trends. 90% of my videos are watched by non-subscribers. If you're watching and you're not a subscriber, please subscribe for me. That gives me a lot of feedback as to how well I'm doing with the content. And feel free to reach out and give me your opinions on everything from the metals market to my videos. I'm all about constructive criticism, and I am here for you. So don't forget, like I said, to subscribe, hit the notification button for weekly updates.